Evergrande, tip of the iceberg. Is the collapse of the real estate giant Evergrande the beginning of a Chinese housing market bubble burst? Will the Chinese economy maintain moderate strength in 2022 while causing a negative ripple effect on the global economy? According to new evidence, bankrupt Chinese giant Evergrande is just the tip of an iceberg. The potential for a dominoes effect hitting the Chinese economy and causing serious global financial imbalance has grown exponentially in recent days. The global economic recovery outlook has just become gloomier. Welcome to the World Econ News, your daily dose of economics and finance. If you're interested in topics influencing the world's economies and global financial flows, this is the place for you. Watch till the end if you want to get the latest on everything. And don't forget to subscribe, like, and hit the notification button to get the latest updates. Let's go. Today, the Chinese real estate giant Evergrande, which has more than 1,300 large projects under construction in hundreds of Chinese cities and 1,000 subsidiaries that operate in everything that can cross your mind, is unable to pay creditors and banks even a few $100 million a month. Its total debt, aka liabilities, stand at the mind-boggling sum of $305 billion. The Evergrande crisis has been escalating since September 2021, a month after it warned its investors of a debt default. As it recently turned out, other Chinese real estate giants are facing the same fate as Evergrande. However, the Chinese government has yet to release more details. According to experts, Evergrande is the largest piece of a domino effect, and it's falling. Other smaller pieces are beginning to fall too. If you're wondering about the size of Evergrande, just imagine this. It has more than 200,000 direct employees and is responsible for as many as 4 million indirect jobs in its supply chain. Its real estate projects are massive in size and scope. It currently has 700 projects in China. It's supposed to deliver up to 2 million housing units in the near future. Meanwhile, not only can it not pay interests on bonds and loans payments, but it also cannot pay the contractors. That means that its accumulated overdue payments to contractors and services, construction material and logistics providers could also be in the tens of billions of dollars. However, it's not disclosing these numbers to the public. There's an economic iceberg melting in China, and it's raising financial waters levels around the globe. According to China's state media, the government outlined 3 red lines for 12 real estate giants in 2020. These red lines have not been disclosed by the Chinese government. Nevertheless, the media describes the red lines as 3 specific balance sheet conditions that real estate developers must see if they want to take on more debt. In a nutshell, the rules require developers to limit their debt in relation to the company's cash flow, assets, and capital levels. In 2021, all the 12 real estate developers crossed at least one of the red lines. However, Evergrande crossed all 3. In simple terms, Evergrande, the largest of the 12, gave the Chinese government and its red lines the middle finger and arrogantly carried on with its unsustainable, poorly calculated borrowing mechanism and bonds issuing spree until it hit default. Recent info shows that other developers who crossed 2 lines are also in big trouble. Just recently, some scary numbers began to surface regarding Evergrande and the other 11 Chinese real estate developers. They're not all just heavily indebted, but must also muster more than $1.5 billion a week of interest on international bond payments alone. Moreover, it's not clear how much they have to pay the Chinese banks and Chinese bondholders. Hence, it's safe to assume that they have to come up with at least $3 billion a week, since most of their debts are national. So far, the Chinese government is not allowing these corporations to release any useful details, hence the last figure is speculation. While all the attention is directed at Evergrande, other Chinese developers are beginning to show signs of serious distress. Just recently, Guangzhou RNF Properties bonds have slumped to deeply depressed levels ahead of a $750 million bond payment. Unlike Evergrande, Guangzhou RNF Properties have several unfinished mega projects in global cities like London. China's real estate developer, Xi Group, has also been offloading assets to manage its out-of-control debts. The Chinese government is secretive and unwilling to release any information other that it's in control of the situation, which raises many questions. Most experts are speculating that it's already bailing out the real estate sector. Others say it cannot do so without causing serious future complications. The picture remains vague, but there are signals that the Chinese government is restructuring the troubled developers' debts while forcing them to offload some assets to make their creditors payments. Here are some of the recent signals. Number 1. The government is planning to make it easier for state-backed property developers to buy up assets of struggling private rivals. Number 2. The New York-based marathon asset firm bought some of Evergrande's debt, which is currently being sold at a very low price. The firm is seeking to profit from the crisis by banking on the Chinese government-driven debt restructuring plans for Evergrande, meaning Evergrande is too big to fail. Number 3. It's predicted that China's central bank is set to unveil more easing steps to support slowing growth in 2022 through injecting cash into the economy. Number 4. The People's Bank of China reiterated that risks posed to the economy by Evergrande's debt crisis can be contained. Number 5. China is openly trying to limit the fallout from Evergrande and other developers' possible collapse because the real estate sector accounts for about 30% of its economic output and as much as 75% of household wealth. That being said, economists estimate that such mobilization by the Chinese government to rescue Evergrande and other developers will leave it financially exposed in the face of any potential new financial crisis, deplete its currency reserves, create more corporate reliance on the government, cause a crisis in private banks, increase the national debt, and complicate its plans for diverting investments towards the cash-hungry technology sector. Some economists even said, China is playing with fire. The Chinese economy was projected to grow by 5 to 6% in 2022. However, Goldman Sachs' forecast for China's economic growth in 2022 is around 4%. The reason for the difference is the fact that the accuracy of China's official economic data is frequently doubted, and there are new widespread COVID-related restrictions and lockdowns, in addition to the increasing risks and volatility in the real estate market. However, all these numbers mean nothing because many analysts expect China to maintain its zero-tolerance policy for controlling the pandemic until at least the fall of 2022. That's when the ruling Chinese Communist Party is set to hold a meeting that's expected to give President Xi Jinping a third term. This fact, combined with other factors such as the expected US Federal Reserve unpredictable level of hawkishness and countermeasures to tackle inflation, the stress caused by Evergrande and other real estate developers, the predicted fluctuations in commodities prices, the uncertainty around the future of US trade deals, the warnings of insufficient demand across the board by Chinese consumers, the US-China standoff over the state of Taiwan and the South China Sea, and finally China's plans to impose more sanctions on American officials as a countermeasure to US sanctions on Chinese officials and military industries. According to Yan Yujin, director of Shanghai-based E-House China Research and Development Institution, cities of all classes are under pressure. The current scale of market supply is large and demand is weak. The key is to accelerate inventory destocking to stabilize home prices. Himanshu Porwal, emerging markets corporate credit analyst at Seaport Global, recently said, "I think the worst might be yet to come. A lot will depend on what the Chinese government does in terms of liquidity measures." According to Zhonggang Bank, it will likely take a few years to resolve the real estate industry's problems. The central government will need to issue debt and spend more to help local governments weather the hit to their revenues. According to Moody's ratings, regional and local Chinese governments derive at least 20%, if not more, of their revenue from land sales to developers. According to Fitch Ratings, weak market sentiment is also affecting residential home sales as buyers postpone purchases in anticipation of further price reduction. We expect a reduction in real estate construction activities to ripple through related sectors such as steel, iron ore, and coking coal, decelerate overall fixed asset investments, and even put a strain on financial institutions. In conclusion, China is facing a housing market bubble burst that can lead to a global recession similar to the 2008-2009 recession that was triggered by the collapse of the US housing market. The Chinese policymakers are facing serious challenges. They want to reduce real estate-related debt levels while ensuring the property market doesn't slow drastically. Beijing has emphasized that stability is its priority in 2022. It's also made it clear that quality of growth is increasingly more important than quantity. Would you like to learn more about what influences the world's economies and global financial flows? Click on one of the videos that show up on the left or go to our channel to find other interesting topics. I'll see you next time.